Okay. Probably what I'll try to share with you in the next 40 minutes is my journey as an entrepreneur and how different it is from when I started and how conducive it is for any startups to now get into this field. A brief introduction about me is I'm now part of Alco Partners. What we do is we help startups in Vizag in terms of providing them mentoring support and in providing them some infrastructure support. And also, if we like the idea, we would also invest in the early stages of their startup if we find it attractive. So we formed this with another four partners of mine. All have successful business ventures in Vizag. So it's a small way of giving back to the Vizag entrepreneurs or entrepreneurs from Andhra Pradesh. So I started, though I am from a family business background, the entrepreneur bug hit me quite early in 2000. And I split away from the family business and I wanted to do something on my own. That's how I started my entrepreneurial journey. And I had to go through the same challenges like any of the entrepreneur today goes through because I cannot go back to the family and ask for funds. So at that point of time, we floated a company which offered finance and accounting services. The idea that I had in mind was I partnered with a few professionals in Vizag who are chartered accountants. I know that they had professional talent and competence to deliver finance and accounting functions. So I thought, why don't I offer the services to the overseas customer and get higher revenue? That was the model. I didn't know it is called as KPO, BPO at that point of time when I approached into the market, but I jumped into it. And then the journey started wherein I had a friend in the US and then he said, okay, come down, let's explore. Went with a website, created and a few brochures and made some case studies. Flew down to US, fortunate enough to get some few inquiries in my first trip. Did a pilot project for them. And then probably ours was the first finance and accounting BPO services that started from Vizag in early 2000, 2002 to be very specific. And then our company, the client with whom we worked, their business grew and we also grew with them. And they acquired us in 2005. And I headed their operations with offices in Vizag, Kolkata and Siliguri. And global offices we had in US, Campu. And we were expanding good. I was with the company till 2011 and then I exited when there were further investment in the company. So I've seen the early stages of investments in startups, how VCs and angel investors come in with their money, how they help and contribute the companies to grow and go to the next stage. Things dramatically change from that time to this time. And today, I believe all the current entrepreneurs are in a very better stage because the entrepreneurial ecosystem has changed to the benefit of startups. And I think today, I standing before and talking to you about this in Andhra University speaks a lot about how every state in the country, every university in the country realizes the importance of having startups as growth engines for economy. So there are lots of opportunities for startups. So with this background, let me get into the fundraisings for startups. I'm not talking specifically about angels or venture capitalists, but I want to specifically talk about what are the different options that startups have in order to raise funds. So first of all, let's try to understand when and from whom you would like to raise the money. Is it visible? No? Can you read ideation and pre-seed stage there? Yeah, you can. Okay, I don't think so. Can we do anything in terms of zooming? No, right?
No.
Okay, I'll read it out. So if you really understand the different stages which a startup goes through in its entire life cycle, the first important stage is called the ideation stage or a pre-seed stage. This is when someone is really excited about an idea. You see, startups are primarily solution finders. What do startups do? They primarily pick a problem in the society or in the business, and then they come up with a solution that is probably cheaper, better, and then they pitch that solution and they make money. So that is the primary idea. So if you want to get into the startup space, the first and the foremost thing is look for a problem that is impacting large number of people. Because if a problem is not impacting a large number of people, then you will not be able to make profits out of this idea. Of course, there are some social causes that can be handled, but again, that's not for profit. That's non-profit activity. But here we are talking about primarily startups which are trying to make money from a profitable venture. These are the regular enterprises. The first stage is called as an ideation or a pre-seed stage. When you conceive that I have probably a good idea that's going to change the way this organization functions or this industry functions. So that is when it is called as an ideation or a pre-seed stage. In that stage, normally what entrepreneurs do is they bootstrap, or it's like self-financing. You like pick up all your savings and then invest your first thing, because it is just in the ideation stage. No one is really going to believe in what you want to do. So there is some groundwork, there is some time and money that has to be spent in order to move from the current stage to the next stage. So the first option available is bootstrapping or self-financing. And then when you exhaust your self-financing thing, then probably you go to your friends and family, because they probably give you funds because they want to see you success and not much worried about you returning back the money. So there is a trust level and there is a relationship with your friends and family. So they probably invest you more on the relationship that you have with them, not on the business idea per se. But there could be people who would invest only in the business idea, even from friends and family, and they are very good for you. If your friends and family are rejecting an idea of you which you think is great, then they are doing a lot of good to you. They are not doing any harm, because they have probably evaluated their money and they said that, okay, this probably needs some more tweaking. So as per me, those are real good friends and family who are not just investing because of the relationship. And what are the third option that you have is business plan and pitching events. You probably make a business plan presentation and go to any of the contests that are happening. You go and present. They offer a prize money sort of a thing. So you survive with that and you fund it. So in the initial stages of ideation and pre-seed stage, these are some of the options that are available for startups. And then comes the validation stage. This is a stage where you see a lot of people go and win in pitch competitions. But it's all relative. It is because every startup contest, probably there are 10 or 15 number of participants. And if your presentation is better than others, or if your idea is better than those 14 others, probably you win it. So winning in a pitch competition doesn't make it a great workable idea by itself. So it needs further validation. So what you do is you then take your idea to a different set of people who are called as incubators. And there are some government loan schemes, and there are some angel investors, and there are some crowdfunding opportunities. What are these? Incubators are something like a prep school for startups. We probably will spend some time discussing elaborately about what incubators are. But as a point to note that these are the different options available at this stage of startup journey. And then once your idea gets validated and you go into the market and you get some early traction in terms of some customers, start seeing some revenue coming in. Customers by seeing, you see a lot of startups initially they give freebies, right? My startup, even Jio came and gave a lot of freebies for a very long time. And then when they suddenly asked people to pay, that's when they saw the customer That is the real validation. So in this, after validation, when you get the early traction, then people would really question you. Okay, I am paying say 5,000 for this service. Is it really giving value to me? So you need to get that. Once you get that early traction, then you go and talk to venture capital funds, or you also talk to banks and non-bank financial companies, and then there are venture debt funds. So there is a difference between equity and debt. How many of you in this room are from commerce and finance background? Okay. We'll also discuss about the difference between the debt and equity at a later stage. So again, there are debt funds and there are equity funds, so which you can take from this set of investors. And then comes once you get the early traction and you go back, review at all your assumptions, and then you fix the nuts and bolts, and then you make amends to your probable solution, and then you're going for scaling up the business. Probably you go from a test market phase to a bigger city, or multiple cities, or multiple states, or multiple continents. It all depends on how big is your solution and to whom it is acceptable. Then the big boys come into the picture, who are none other than the venture capital funds and the private equity investment funds. And then you also have exit options from your venture, because you see, gone are those days where startups want to continue with their business for eternity. Startups want to start with an idea and they want to start from zero and take it to a certain level and then exit and probably do something else, or have another startup, or they want to probably relax. So exit is an important phase for any startup. So in the exit, what do normally startups do, or the startup entrepreneurs do, is they look for mergers and acquisitions, and then they also have an option of IPO. This is probably the summit sort of a thing, and they also sell shares to different platforms, and probably they also could give a buyback arrangement if they want to continue. And then because at that point of time their venture may have made a lot of money, so they have money, so they wanted to increase their stake, so they may also buy back the stake that they have sold earlier. So these are the different options that people have in the entire startup journey. Now, this is related to the question that I asked about how you want to raise this money from the market. There are different ways you can raise the money. One is grant. What is a grant? Grant is like money given to you by someone without any repayment obligation. It's like the best case scenario, right? It is zero cost, there is no repayment pressure, and you will have full control to the way you want to run your organization. Why do people give you grants, or organizations give you grants? That's a big question. So there are some organizations which want to encourage the entrepreneurs to go from the ideation stage to the next stage. So probably they do some contests and give them a grant. Or if you are fighting for a social cause, probably there are some CSR activities that they have a pool of money that they want to give. Or government can come up with some grants for, say, women entrepreneurs or entrepreneurs from backward states, or in this particular field of agriculture or something like that. And then they can give you a money with no strings attached. You can jolly well use this money the way you want to develop your business. So this probably is the number one option for any startup, because it's money with total control in your hands. And then there is debt. What is debt? Debt is nothing but a loan. By loan, there is a rate of interest that needs to be paid. So that is fixed cost. If you are borrowing, say, 10 lakhs from someone X, probably before you take the loan, he will come up with his term sheet. He will say, I will give you 10 lakhs with an interest payment of 12% per annum. Probably because yours is a startup, you can pay me interest once in a year. So on and so forth. So you know that the 10 lakhs borrowed from X costing you 1,20,000 at the end of the year. He is not going to interfere in the way you want to run your business. So you will still have control of the way you want to run your business. But there is a repayment pressure. Not everyone would be interested to only ask for interest payments. They might ask for a principal and interest payment. in this earlier example, if someone lends you 10 lakhs, they might say that, okay, first 1 year you can only pay me interest at the end of the year, but the 13th month you need to clear also principal at 1 lakh a month plus interest. So no matter how good or bad your business is, it's a commitment given to the lender, and you have to adhere to the commitment. And he'll not give it to you free of cost. He'll probably take a lot of documentation. It could be a check, it could be a promissory note, some arrangement wherein he can come and attack your business any point of time. So if you are taking debt, you have the fear of repayment, whereas you do not have the fear of losing control for this business. And then there is equity. What is equity? Equity is ownership, right? In a startup, an ownership is, if you have a co-owner, the co-owner will have share in both profits and also losses. There is no repayment pressure. Suppose you need 10 lakhs in the earlier example. There is someone who is willing to join you as a co-founder. He brings you 10 lakhs. You give him 50% share of your company. So the 10 lakhs, you use it for the benefit of the company going to the next level. There is no obligation for you to make a repayment to that, because equity is share in profits and losses. But no one would invest in equity without asking for control of the company. They would like to monitor the way the company is functioning. So depending on the stake the person has in the company, you lose the control of the company. So equity is an option where if you are willing to share profits and losses, there is no repayment pressure though, legally. But again, you see a lot of companies that have gone for IPOs, they have an obligation towards their investors. Though they are not bound to give any dividends to them, but it is their moral obligations to give some form of a return to their investors. So they work hard to get profits for the company and they distribute it as a dividend. So it's more like a moral obligation, but not as a financial obligations per se. And here there is a shared control. It's no longer your company. If you have a co-owner, you are sharing the control, the weight of the company with someone else. Then again, whom to approach? Based on the three types of instruments that we have, which is equity, debt, and grant, and the other parameter being control. One needs to take a prudent decision whom to approach, when to approach. So if you are insisting on having full equity and control over your firm, and the best way to happen is you go for government grants and funds, or you look for debt options. The debt options could be from banks, it could be from venture debt funds, it could be from revenue-based financing. This is something that has recently come up, revenue-based financing, which has been a boon to a lot of startups who are after the validation stage. When they are going to an acceleration stage, there is a lot of requirement of working capital for them. So by working capital, what we mean is it is the interim capital that is required to run the business, because very few clients give you advance for the services. So you have to invest for the service delivery and raise an invoice, and the client pays you after a certain X amount of time. So till such point of time, you need to have some capital to meet your expenditure, because your employees are not going to be happy if you are not giving them salaries till you get from the client. So is your landlord, so is your utility supplier. So for this, you have an interim requirement. So it is not prudent for anyone to part away with equity for working capital requirement, because you know for sure that you are getting the money for in a short term. So you need to probably go in for a debt sort of a thing, where you go in for a fixed rate of return and then continue your business. So there are a lot of companies who are specifically focusing on startups. They look at your invoices, they look at your revenue pattern, and they say that, hey, I'm going to give you a free overdraft facility or a credit limit up to so and so without any collateral for you to meet your working capital needs. That's a boon. So in cases where you want to have full control and equity, then these are some of the options that you need to look at. If you are okay parting away a little bit of equity and a little bit of control, then probably my recommendations is to go for crowdfunding. Crowdfunding, is anyone aware of crowdfunding? Okay. Crowdfunding is similar to the share market. In share market, for a company, they have to get listed and people can buy and sell shares. Even before listing, if you want a lot of people to participate, then IPOs are the route. IPO is nothing but an initial public offering. So there are a lot of regulations for IPOs. So there has been a small business IPO that has recently come up, which is to the benefit of small businesses. But for startups, there is no such platforms. So there are some platforms, crowdfunding platforms in India that are doing this service in a limited way. So if you have an idea, you can present it on the crowdfunding platform and you can mention a ticket size. It could be, if you want to raise 10 lakhs, you can say, okay, I have 50,000 ticket size and I am looking for 20 investors who can invest in this company. So you can invite people to participate in the company, but you share with them your business plan, your financial projections and everything. If they are interested, they participate and they come into the equity. Or if you want to raise a debt, you can also go in the crowdfunding platform. But more importantly, crowdfunding is equity based. And there are accelerators and incubators. These are something that have come up recently in India for sure. So they are really a boon to startups because they are not only helping you to provide funds, but they offer a lot of guidance and support and contacts and connects that will help you to move to the next level. And the third thing, which not many people are aware of, is family offices. Family offices are, you see, India is flooded with a lot of family businesses, which are going in for ages, since before the license, even in the license era, said they are expanding and growing multi-fold. But of late meaning in the last 5 to 7 years, all these family businesses, they are also hiving off a set of money aside and they want to invest in startups. They are not interested in managing, but they want to really look into an idea, and if it is of interest, they will invest. Many people may have heard about Ratan Tata being investing in a lot of startups. So this is something like that. And there are a lot of family offices in India which are doing this sort of funding to startups in India. And then you have angel investors. Angel investors are someone who will not interfere much in the way you run your business, because that is not their main objective. They have some surplus funds, so they invest in your venture. They guide you whenever you need and they allow you to run your business. If you are willing to part away with equity or live with less equity and less of control, then probably you are looking at corporate venture capitalists or venture capital funds or micro venture capital funds. So once venture capital people get into your company, you are bound to lose control because they are investing money and they are investing big money into your venture. So they are not going to leave the money unobserved or unaccounted. They want to spend every penny into an area which will give them multi-X returns. So they probably would sit in your boardroom. They will probably manage day-to-day functions, not at a micro level, probably have someone to look at that. They will definitely participate at a strategic level and give you direction. So with VCs or venture capital funds, you are bound to lose controls, but that's how you go to the 10x or 20x stage. And here is a quick comparison between angel investors and venture capitalists. So these are different in terms of the structure itself. Angel investors are normally individual investors who are HNIs or high net worth individuals who have a lot of money. So they probably want to invest a part of their savings into startups if they like an idea. Whereas venture capital funds are a big company. They're an organization by themselves who raise money from this set of investors and they want to invest in companies. So it's an organization by itself. Here angel investor is just an individual investor. In terms of investment size, though it varies, the typical ticket size could be anywhere between $25,000 to $100,000, whereas in VCs it could be anywhere 5 to 10 million range, and it could vary depending on the idea and the need. The responsibility and motivations of these two people differ a lot. You see, angels are primarily more likely to provide you financial support and provide advice as and when needed. They would not like to interfere much in the business activities of the company. Whereas venture capitalist funds, they would like to establish strategic focus. They want to help you in finding the right direction as to where you want to focus all your energies into, which markets, which products, and all this sort of things. And then they also are aware of the fact that it is not easy for a company to scale without the right talent. So, and very few people are interested to work with startups, because you need people with experience and exposure, and not everyone is willing to bet on a startup. What VCs do is they provide credibility to a startup. Any startup that is being funded by a VC will get some credibility, and good talent would look at them. And probably the VCs also would like to work with a lot of seasoned professionals whom they want to bring them on board. Senior people, they probably give them some stake. They would work for a year or two. They would really ignite a lot of energy into the company, take it into a greater space, and then they want to achieve quick results, which is possible with VCs. And then definitely venture capital funds, when they invest a lot of money, they would ask for a seat in the board. Board of directors is the premium body of any corporate that will take strategic decisions. So having a seat in the board is what I mentioned about losing control. So you might be the startup founder, but if you are outweighed in the board, then you have to listen to what your investor is saying. And these are some of the challenges that the startups face, to the extent that they quit the startup and they hand it over to the venture capital funds, because the company cannot go lonely on the way the startup founder wants once the VCs step in. And stages of funding, as we discussed earlier, angels probably look for early stage businesses if the idea is really good, or they would look at late stage technical development and early market entry. If your product is ready and you want to get the traction and you want to get the first mover advantage sort of thing, that's when angels come in. Whereas VCs, they are looking at early stage companies. Companies by means it's a fully formed body. It has got every function in place, and it is looking to go to the next mile. And then they're also looking at more developed companies. Probably they want to see the talent, how many people are there. It is not dependent on just one person. They have proper redundancy plans, sort of a thing. So these are the different stages where VCs would like to come in an organization. And the due diligence. What is due diligence? Due diligence is the process of vetting by these investors. Not every investor would just hear your pitch deck and then invest money. They would probably ask for a lot of information. They would go through your books of accounts. They probably will talk to your customers. They'll talk to your suppliers. They'll talk to your team members. They'll talk to your bankers and get a lot of information. Probably do some reference checks. Check whether there are any legal cases on the company. Are they compliant or not? So on and so forth. And then make an investment decision. So with angel investors, that due diligence process is relatively less when compared to venture capital funds. But venture capital funds, they have a judicial responsibility towards their partners. You see, because it's an entity by itself, wherein they collect money from different people, and then they set up a process or a guidelines as to what are the steps that they have to take before they invest in a venture. And due diligence is an important part of it. They do a third-party due diligence. They get the reports, and if there are flags, they probably will not get it. So they have that judiciary responsibility as a part of due diligence. So it is a time-taking activity and it's a cost activity. So it is not easy for many companies to go through the due diligence process. So here is an important thing that any startup person who is aspiring to be funded by a VC have to be well informed is right from day one you have to make notes of all the activities of the company. You need to probably account for all the expenditure in a proper way, ensure that you take the right licenses. Any misses or hits you record it. You see, they're okay with failures, but they want it to be recorded. It's something called as a CAPA sort of a thing. It's a corrective action and a preventive action that is taken for the company. They want to evaluate whether it is an organization which can be run independent of the founder or not. So ensure all the startup who wants to make big, please try to develop systems right from the day one. Compliance is key, and you might have the best of the idea, but it might fall down. And if you have a good idea that is unique, then the first and foremost thing probably you need to do is patent it. If you have not patented the idea and you have done all the hard work, some people may look at it and then file a patent and take away the idea. And you do not have any control over what happens because you have not filed the patent. So, these are some of the homework awareness that people need to have if you have VCs or angel investors in your investment radar. Then let's get some insights about angel investors. As we mentioned, these investors have surplus cash and they are willing to risk in your venture at the seed stage. We know what a seed stage is. And they act as mentors and they probably would invest more in equity and also in debt if the relationship develops at some point of time. Because here they do not want to squeeze or make money out of the entrepreneur. They are more interested in a win-win case of a scenario and they are okay with parting away some of the profits for the betterment of the organization because they have other better things to do. So you can expect some sort of a equity and debt combination with investors. And there are a lot of angel investment platforms that are available as of now in India. You just have to Google it. Inc. 42 magazine has come up with a wonderful list of all the different funding options that are available as on date. And it is very, very informative. So please go through it. And these are all bodies who have come together. Probably they have an office at their disposal. They have a secretary with them. So if you have a good idea, go and start reading these angel investment platforms. Every angel investment platform probably has a set of objectives. If your idea meets those set of objectives, send them your pitch and then you can take it from there. And venture capital funds, as we said, these are probably more required when you are about to get into a growth or an acceleration stage. They provide large amounts of money of capital, which is for growth and expansion. And as I told earlier, they monitor its progress and they will make it a point that their investment is delivering. You see, whenever we talk of funding by these angel investors or VCs, they do not give you funds upfront. They commit to an amount of fund on fulfillment of certain conditions. If someone says that I am going to infuse you $100 million into your venture, it is not that he is giving you $100 million on day one and as a founder you can take away that money. No. He will say probably first 1 year I am going to give you 25 million and for this purpose. The end use of this fund, he will stipulate it very clearly. And he will say that this money has to generate this outcome. If these outcomes are generated, then I will commit to my next round of money. Otherwise, I will not. The same will happen to angel investors. So it is not money in hand for the startup founder for his personal luxuries. All the money that is being given by these investors are towards the growth of the company. And they would ensure that the money is not going out for any other cause other than this. Okay? And what do venture capital funds want? They want equity or equity-linked instruments. You see, the capital structuring process is a pretty exhaustive thing. There are new set of instruments that are coming up in the market because of the changed investment scenario, as against the straightforward equity or a debenture. They have convertible debentures, and they have a lot of they are changing by the time. So if you need to really get professionals to evaluate the instruments that the VCs or angel investors are putting forward for investment, because there are a lot of things that may go unnoticed, which can create a lot of damage to the startup founder. And how they want to exit? They probably would exit in the next round of funding or when the company goes for an IPO. And there are lots of active venture capital funds in India. They are looking for good investment opportunities. You see, each of these VCs, they probably have their preferences in terms of the sectors, in terms of the size of funds, in terms of the regions that they want to operate. So it's not an easy task for any startup founder to really identify which venture capital fund is the most likely one. So they need to do a lot of research and then probably do a lot of homework to make your idea appealing to venture capitalists. But there are a lot of opportunities available in the market. And again, Inc42 has an exhaustive list of all the players. If you want to really break down the different stages of funding, the first stage is called the idea stage, which is the conceptualization stage, where probably you are perceiving your idea. The 100% here is your control and your ownership in the company. At this stage, if you are a single founder, you probably will have 100% control and 100% ownership. So when you start, the company's valuation is nothing but zero, right? And the founder's equity is also zero at that point of time. What goes in is his time. So it is very important, again, for startup founders to record their time they are spending on this venture. If not for anything, you can value how much would be the opportunity cost that you probably have invested in this company in terms of time. And then, after a certain period of time, normally, because time is so limited and a startup has multiple activities, you look for like-minded people who would like to participate or believe the same cause or believe that the solution that you are providing is of strength. And that is when you invite them on board, and they are called as co-founders. The co-founders are the first set of people who are rubbing shoulders with the original founder. So when the co-founder comes, then it is up to the founder to part away equity to the co-founder. It could be 50-50, it could be 10%, 20%, 30%, it depends on the potential that the founder sees in the co-founder. And it could be at different stages. It may not be in first stage itself. He might also come up with some milestone sort of a thing, and he might say that, okay, initially you probably will get 5% stake in the company, and then if you get this milestone, you'll get 10%, 20% or something. So if you really see, by this stage, the company has got some traction, and assuming that the company's valuation is $2,000, the founder's equity falls from, is now $1,200, even though he has 60% ownership of the company. Earlier, he had 100% ownership, but his value was zero. Now, if I had made some progress, it could be valued at $1,200. These are all assumptions, okay? So, but still, his value is going up. Then comes the seed funding stage. In this stage where you really go beyond the founders and the co-founders, you reach out to your family and friends, and probably go to angel investors or government incubators, or probably if you have more people working in your organization who are willing to not take money upfront, but invest their sweat. You give some ESOPs or give them the sweat equity options. HNWs are high net worth individuals and micro VCs, etc. So when these people invest in the company, you part away with more equity. If you look at it, your equity got diluted from 60% to 30%. And then that 60% is from the other people who have really put in their hardcore money, whereas the 10% is for people who are employees who are probably offering you sweaty. They also get a stake in the company. This is a strategic decision. Why do people give stakes in a company? Is it because they believe in the capabilities of the person, whoever is working in this organization, and they want to hold him for long run, and they want to share profits with them. So this is, with this idea, people offer sweat equity option. So here, if you see, the 30% of the founder is now valued at 15,000. So that's how the value of the company or the founder grows from different stages. If it is not growing, then the idea is no longer a good startup idea. And then it goes to a series A, B, C, D. The series A, B, C, D is a series of investments made by investors. It could be from venture capital people, it could be from angel investors, it could be from venture capital funds or sort of a thing. The first set of investment is called a series A, and B, C, D follows on. So, and then even the VCs, when they do the funding, they normally, because I've been a part of this due diligence process, when they talk and make this extensive study of the company, they make a list of key people in the organization, and they would like to talk to them, and they would offer them ESOPs because they want to hold them for a longer time. Because whoever is putting money, they would clearly know that without these people, the company cannot go from the current level to the next level. So here you see the different chunks of people. Probably 60% is the first set of, the 20% probably is the first set of people who participated in the seed funding. The 60% is something that who have participated in series A, B, C, D, and the 5% is what the ESOPs, the company, the people who put in stock options, stake got reduced, and the founder's stake gets reduced to 15%. Though their stake, individual stakes reduces in smaller proportion, the value they get increases. Here, if you see, the founder's equity has gone to $75,000. So that's how everyone makes money. But this money is not real cash they have. It is the valuation. So it is subject to the company making profits. And when do the founders get real money in their hand is when they exit from the company, when they cash out. So it's a long journey. Anyone who wants to get into the startup space are for a long haul. It is not less than 5 years to be the lowest. It could be 10, 15 years for a really good idea to take the traction, unless you're really fortunate enough. And then there is the final Big Daddy case, which is the IPO stage, where everyone is diluting or cashing out their stakes and throwing it out to the public at large. It's called the initial public offering stage, where 92% is from retail investors. Your company gets listed in stock markets, it could be in India, it could be in Astro or somewhere else, and individual investors buy these stakes. And it's a trading or a share market game. You as a founder probably will have the least stake at that point of time because it gets diluted, but your wealth really increases multi-fold. So from where you started from zero, someone has the opportunity to make 4 million odd. So these are the different stages of funding and how the valuation and the control changes over different infusion of capital. Now, we have talked about venture capitalists and angel investors, but as I told you, in the current day, the entrepreneurial ecosystem has changed a lot. There are so many players because of the intervention of the government, but for sure, also the society and the educational institutions and individual businessmen in the country who know for sure that the country can progress when a lot of small businesses and enterprises flourish, and there are more unicorns coming out of a particular region, which is common startups growing to a multi-fold corporation. So this is a new set of funding opportunity that is available for startups, which is accelerators and incubators. What are these? These are more like a prep school for startups. These are where you go in, pitch in with an idea, they first look at your idea, if they like your idea, they invite you into their campus. You spend quality time with them, rubbing shoulders with the senior management of these accelerators and incubators. They give you tasks on a day-to-day basis or a weekly basis. They take reviews and then they help you acquire all the skills and wherewithal that is required for you to go to the next level. This program normally runs for 4 to 8 months depending on what sort of a program it is. And then what are the key takeaways? You definitely get funding from them. But more importantly, it is a platform where you connect with other investors. Because any angel investor or a VC would like to probably look at an incubator or an accelerator because they have done all the important work that is needed for them to evaluate a business idea. So any idea coming out of an incubator and accelerator gets more weightage than someone doing on their own. And you also find great mentors in this place who can be really handy in terms of getting your first set of customers, which is the most difficult task for any business. And they also connect with other startups because this is the environment is very conducive. When there are 4 or 5 people that are working together, everyone has a different solution to offer. There could be collaborative opportunities where people can collaborate and work together and both can have a win-win solution. So who are some of the renowned operators in India? Y Combinator, there is Microsoft, there is Google Launchpad, and there is also Georgia, and probably Ravi knows more incubators. We also have Gramina here, right, as an incubator, accelerator. So all for different causes. And again, this has a list of Design Hill. There is a list of 50 best startup incubators, which people can really look into. And then any serious entrepreneurs, it is, if you can get there, probably you've made good progress. And we talked about government grants and funds. The government is definitely more focused these days in terms of helping startups. So they have Startup India program, wherein they probably would like to offer rebates for any patents that has been filed by entrepreneurs. Now it's 100%. Okay. I said. Free. Okay. So all the incubation centers, they help you really in reimbursing. Is it reimbursement basis?
Some cases it is, some it is like they'll take care of. Go through an incubator.
Okay.
It's free. The incubator will invest on it.
Yes. So there's a lot of advantages these days with the government interventions and with startup incubators coming at the university level. It really is a boom. And then there is Startup India Seed Fund. There is a fund that is being allocated by the Ministry of Finance to different vehicles. It is called the ZIPB. They invest in alternate investment funds, who in turn invest in startups. So the government is doing its bit to invest in the companies, and these can come in the form of grants and funds. And we discussed about crowdfunding. This
Grants.
At the incubation center,
We got TBI, especially for FAB. We got a 5 crore, out of which 1.5 crore is only grant, non-equity, it is only just you can pick and then give money and they can use it.
No interference from them. They just give you the
crore of seed grant. It's not seed fund or seed grant. Okay. I can give up to 10 lakhs per start.
Excellent. So that sort of support and hand-holding is being given by the central government. I don't know if state government also has come up with something like that.
Yeah.
So probably they will even
they're going with more like
infrastructure support and sort of thing.
They have a few things but they're more going like pitching. When you get some money, so
okay. They're giving recognitions both financial and in crowdfunding, as I told you, these are retail investors who have an appetite for investment in startups. So you go onto a crowdfunding platform and you pitch in your idea, and then people will review it. They probably connect with you on a personal level and then see if they like the idea, and then they invest. Here the ticket size is small. By ticket size, I mean the amount invested. It could be 50,000 or 3 lakhs or 5 lakhs. So if you have a requirement of 1 crore, you can probably look at crowdfunding platform and then you can have multiple people investing for that 1 crore. The advantage you have is people with smaller chunks of investment, they do not interfere in your decisions of running the organization, which is a great freedom to have for a startup founder. But again, a caveat here is crowdfunding. All the activities of crowdfunding platform are not completely legal, so you need to be aware of the guidelines that one needs to follow, because this comes under SEBI norms, and SEBI has restrictions in terms of how many people you can approach for raising money. If you're reaching the public, there is a vetting process, and it can be only done through an IPO, be it a small business IPO or a large IPO.
Yes,
But a crowdfunding platform, if it's a small people, you're approaching 10, 20% of the people, and your company structure is conducive to that, then probably you can approach. So please go through the legalities before approaching the crowdfunding platform. And there are some renowned crowdfunding platforms which have helped some of the startups. And we discussed about family offices. To my surprise, in fact, I believe the family businesses are doing a great amount of investment in startups, and the list is very long, very, very long. So these are family-run businesses who are probably allocating a sum of money to be invested in startups who are not related to them. They would just like to give their expertise. They would like to give their money in order to take your idea to next level, and probably they can be your first set of customers or first set of referrals, and they can get you good your business to move to the next level. I believe India has over 140 plus family offices that heavily invested in Indian startup space.
NSFL and Bangalore runs cohorts only for family businesses investing.
Excellent, excellent.
Aditya, all these guys,
And the advantage of family offices is because they know the way Indian business works. They are from the country. They know the problems or the troubles that an entrepreneur will face, unlike any VC or angel investor who probably had made a lot of money outside India, and he's looking for a lot of regulations and stipulations to follow on. But whereas a family office will know, "Arey yaar, ye nahi hota. This will work in." If you say that, okay, I spent X amount of money, but I didn't take bill because I have to pay an extra GST, he'll understand the thing. He will see, okay, you got the value. So there is more comfort in terms of approaching this family offices. And I believe they are going to contribute 30% of the Indian startup investments by 2025, which is a big money. Which is a big chunk of money. So probably, Ravi, I think university also needs to look for family business in India and around this region and come up with
this. This is given by GMR.
That's what GMR.
You're talking to GSW, you're talking to people.
Okay, excellent. So that is a very important input for any startups that are coming. And the advantage, as I told you, they are more patient than angel investors and give startups more time, money, and more importantly, resources to grow their businesses. Some of these family offices, they probably would help you in hiring talent, and they can say their HR to take care of that recruitment. Okay, if they want you, if you need some advertisement or marketing support, they have a department to look into it. They might pitch in and do on a pro bono sort of a thing.
Largely, I see that they're coming here with strategic investments. They're finding because
problems within the organization, and they want to give it out.
Yeah, internally their pace of coming up with new products or change from a traditional setup that they have.
And even the cost
is very distinct. Startups are very agile. They come up with something like 2 or 3 such large firms approach one of the IoT company that I'm part of because they wanted from the regular stuff, like gold material and all these guys moving into IoT based electrical equipment. So they are trying to come and talk, and then they actually bought 2 or 3 equity stakes and they became a strategic partner because the supplies also come from them.
Excellent. You see, probably if we can build a repository of the problems faced by these industries, and then this could be the ideas for people to really probe on and find solutions for the entrepreneurs.
No, it's So very clever thinking. The guy invests in the startup rather than asking to be a supplier. Now that he gives orders and he helps get them multiple orders because you already have a big supplier whom you're supplying, and then investor supplier, and then because of that you start getting more orders. What's happening is his money that he's putting in to get this thing is part of his investment, which grows 10x, 20x, 30x times.
And his inputs are secure.
And he doesn't need to do anything. Yes. It's actually the startup guy who's doing all the innovation.
Yes. And look at the list of companies that are there who are doing this sort of investment for startups in India. And again, this is from Inc42.
EPIS is running still for telecom for GeoNext.
Okay.
GeoNext is the Geo's Reliance's own thing. And they're running a.
They also have an accelerator.
They want to invest into 20 startups and then which are in telecom and then next.
Depending on the field of your expertise, probably people can pitch into this sort of companies, look into their objectives, and then focus on offering solutions. And then there are micro VCs. These are another set of things which can also be handy in the idea stage startups. These are like arms of venture capital funds where the ticket size is less, and they can help you in ideation stage to build your prototypes and sort of a thing. And they probably would like equity in exchange of their investment. And there are specialized micro VC funds in India who are doing this activity. And then there are venture debt funds. When I said debt, you understand that debt comes with a fixed cost of capital. You need not part away with your equity, so no parting away with your profits. And all the more important, you're not parting away with the control of your company. So there are some debt funds which fund venture-backed startups. If you get a venture capital invested in your company, then probably there are some companies who are willing to give you debt for your working capital requirement, as I told you. This would be in growth stage. The purpose would be for working capital, because bank loans may not be the only available funding options, because they go through a different criteria of evaluation. And this could be in the form of NCDs. This is again a different debt instrument that is in place in a normal way, which is a non-convertible debenture. There also have convertible debentures which will convert into a equity at a later stage if they want to have a stake in the later stage of the company, and equity warrants. And there are specialized venture debt funds too that are available, and the list is available in Inc42. But again, having looked at the different investment opportunities that are available for a startup founder, one needs to really understand why anyone who wants to invest in your company will do it, right? Normally, even in family, if you go and ask your mother, I need 100 rupees, probably she will give it yesterday. If you ask 1,000 rupees, take the rest. But you should, once you approach this investor, you need to do a lot of homework, and you need to really understand why or what is it that they are looking for an investment in idea. So if you know this prior, it will really save your time, money and effort, and also the VC. And it will probably help you save a lot of heartburn, because you think that your idea is great, but VC is not even returning back your email or a call. First and foremost, they want to know whether your idea has got the intellectual property. It's unique, and you have rights over that idea. Because you name an idea, probably you Google it, you will find 10 people who are already offering solutions based on that idea. Okay, so this probably is one of the first checklists you need to do. The solution that you're offering to a problem need to have a large market first. There are a lot of people who approach us saying that we have a great startup idea, but when we really look into it, it is just another business. It's not a startup idea. Startup idea is completely different, because it has to address a large problem and it has to have the opportunity to scale. And then it needs to have management team members with expertise and experience. You cannot approach a VC in the normal circumstances until and unless you have a good technology thing, sort of a thing where you can do it on your own, without having a set of people who can convert this idea into a proper business. So you need to have good team members in your company in order to business model that you're offering has to be scalable. It has to grow exponentially. Otherwise, they are not interested to invest their money. And this organization should have the ability to provide an exit for whoever is investing in this venture. Normally, any investment made by angel investors and VCs, they look up at a 5 years plan. It could be early 3 years, or it could be 7 years, 10 years, unless they're locked in it for some reason, sort of a thing. So the investor need to really tell him the different exit options that are available for anyone who is investing in this venture. And then the price at which you are offering to the VC should be a realistic one, from where he can make multiple gains. A lot of people say that, okay, I am valuing my company at so and so billion. So for the company to make that much business itself is a question mark, and for anyone to invest that amount of money at that high valuation and still make money out of that is not a possibility at all. All the venture capital funds or the angel investors are not looking at 6%, 10%, 12%. They are looking for 3x, 5x, 10x returns. So the organization should have the potential to generate so much profits. But of late, we are seeing a lot of businesses who are not even operational profit, but the valuation is going up for different reasons. So the VCs, they make monies when they do a merger. They sell it. One VC sells the stake to another VC, and then they make money, even though the organization by itself is not making any money. That's happening these days. So valuation is a big topic that happens. But the valuation at which you are offering to a VC is very, very important, because that should allow him to get that delta return on the investment that he's making. So if you are aware of this and do your homework and make a good business plan and a pitch to a VC, then probably you have a fair chance of going to the venture capital stage. But a question needs to be asked by everyone: do you want to go that path? Do you have the fuel within to take a company from this stage to a VC stage or an IPO stage? You probably are happy in offering solutions in a small market, and you're still making recurring returns of money for a consistent long period of time. So these are some of the questions you need to ask, because once you're very clear that you want to hit bullseye in terms of approaching a VC or an angel investor or an IPO, you should be willing to exit from the company. You cannot have control and still have a lot of people invest in your company. Hardly you see such companies, probably zero. There are cases where the founder is still perennially continuing with the organization. So this is in a nutshell about the different investment opportunities that are available for startups, and I believe we are in the best time, because the startup ecosystem is like expanding by the day, organization, and then make it worthy enough for the investor to get his return. If not, he will not hesitate to let you go and bring his own set of people. So there are a lot of people who probably look back and say, maybe I shouldn't have got into this entrepreneurial space, because even in companies and corporates, there are a lot of opportunities that are linked to growth. But again, go into this space with your eyes and ears open, with all the information on hand, and this is probably the best time. If you have a good idea, a good solution, then there are a lot of enablers in the current market to take your idea to the next stage. Any questions?
One observation.
Yeah.
Why so many modes of investment like this in the stages? I mean, stages are very large. And in stages, how the investments are happening. And by the time the founder needs more money to scale, or the founder is not going beyond a certain acceleration stage for the business to grow and for external investment. I think one of the most important thing is the personality of the founder itself. Because one, if the founder is attracted to an idea and wants to solve it, I don't think the aspect ends there. But if the founder is self-disciplined, if the founder is very good at controlling finances and not doing think that eventually leads to what kind of financing would the founder get. Because if someone is financially reliable as well and very innovative, they probably don't have to go for VC investment, and within their sphere of influence itself, they're getting money. But if somebody doesn't find that kind of thing, and you spoke very well about control. Control in the sense of having a brand will give you ultimate control. But the problem is if the founder is not self-disciplined or not financially very calculated, then how much of a brand they get, it's not going to result in that company going to go into the next stage. But for that kind of a founder, if they get VC or an angel investor, that motivation has an external push, not just because of the money they are going to give, but also because of the guidance and the mentorship that they bring in. That hey, you have a very good talent of innovation and bringing ideas into the future, but here is where you lack. And most of the time, companies are nothing but the personalities that the founders infuse onto them, and that's where we have blind spots for what is it that we are not looking for. And that's where I think even if the founder does not need that kind of money, but if there is that kind of value, going for a VC or a investment might help them get that external motivation.
Absolutely. Yeah, let me answer. It's completely relative to the founder's personality, and then there are a lot of takeaways when you invite people on the board, be it as an equity investor or a debt investor or a grant. If a person has that personality, he would probably listen to everyone and anyone who is giving you inputs, right? Even though you take money from a grant, you can build on the relationship if you have the appetite to go and talk to them. So it varies a lot. And personally, when I started my company, I believe I was the youngest of my team. I was made the managing director of the company because of I seeded the idea per se. But at a later point of time, when first set of investors came in, the investors did a lot of due diligence in terms of they put us through a lot of psychometric tests, and they said that you are a people's person. That's what they identified me. You are a people's person, so you should be focusing on these activities in the company. So they map, and that was very helpful and insightful for me to really identify myself and see, okay, what my strengths are. I was trying to do anything and everything in my organization, but when you rub shoulders with different set of people, then probably you realize which are the focus areas. And another big takeaway is we try to probably spend a lot of time in grooming a resource, in overcoming their weaknesses. One of my colleagues who is in the US office said that, don't worry on transforming that person. You know this person is good at this, pitch him on his strengths. Don't focus on his weakness. You find another person who will probably mitigate that and do it for you. So these are insightful things, and even for a person to get a grant, he needs to have discipline. Right? So there are certain set of assumptions when we say that when these three options are available, it is for a person who has got the discipline to make the right use of the money that he's getting. Be it from a government body or an equity investor or from a debt instrument. That we are going with that assumption. Okay? Yes, sir. That's good.
I have multiple questions. I don't know if we have time, but what is valuation? Very briefly, why should entrepreneurs really care about it? And is there a danger for entrepreneurs to concentrate on valuation from day one?
Yeah, and that's a good question, but very tough question to answer to. What is valuation? Unfortunately, one of the primary reasons why people take this entrepreneurial path is because of the valuations. They hear that XY companies are valued at so and so stage. So they think that it is an easy route to make a lot of wealth. So a lot of people, they do not have first set of clients, they do not have a proper business plan, and they come to us and they say that my company is valued at 10 crores and I'm willing to give you so and so percentage at this stage. And valuation game is changing by the day, by the hour, by the minute. The earlier norms of valuation were based on the revenues. They were based on the profits. Today, the valuations are completely different. They are based on the opportunity that this company can do with the customers they have in their company. So they're spending a lot of money on customer acquisition. If you look at a lot of big companies, they have a long list of customers, but they are not still making operating profit. So the earlier norms of valuations have dramatically changed. Honest advice to anyone who is getting into the entrepreneurship is if you are focusing only on valuation, you will never make it. Your focus should be on solving a bigger problem in a faster, better, and cheaper way, and money will follow you. But you need to have insights into how it is being valued. There are some things that you have to do for the purpose of valuation. So it calls for a lot of financial knowledge in order to guide through, and it changes from one scenario to another scenario and from one market to another market. If I have answered your question,
Yes, and for a follow-up, talking about it,
Yeah, we'll maybe keep it at the last again. We give him a chance to answer.
I'll do it one-on-one.
No. You can ask. You can give her the questions, let him listening, and then probably pass it. No, because there are 2 more presentations and a book.
Okay.
Sorry. Is it okay?
Thank you, everyone.
I was just adding, so can we say valuation is not important just because the idea is to create value over time, and it's not just about money, but it's a value that it infills into the ecosystem so that it generates money. So at one point of time, once we reach a certain stage, money is not important, but then the value we create is important because that translates into money.
It's a perception because how much valuation is not how you look at it, it's the other person looks at you. So that's how when they trying to check, right? So it's a different mistake. Okay. Thanks, wonderful.
Thank you, sir.
Okay. Anyway, Kiran has been involved in building a big company and then selling it up to $8 billion entity.
Valuation doesn't matter.
Yeah. So he knows he makes good money. So runs part of along with Srinivas there. We run the Ipo Partners. So I think we move on to the next one. Thanks, Kiran. Cool one. Who want to go next? Yeah, go ahead. Laptop this one. Download this one easy. No, I think we need your laptop. Thanks. Technology is not bad. So you got 10 minutes. Okay, before we start, you can just tell about the boat and what you do.
International content.
Before it comes up with it, you will go ahead, take the stage, it's all yours.
It stays right at one stage.
Good afternoon, everyone. I'm Mahidhar Ponnada.
You can go there.
Right. Good afternoon, I'm Mahidhar Ponnada, the co-founder of Edumoon. And as a co-founder, I wear multiple hats in marketing, sales, design, operations, and tech. And we are 12,000 plus student community expanding through college clubs, and we are providing upskilling courses through our Edumoon. And my co-founder Vikas is here, and we are about to impact the students with our community, and we are on the way to go.
Okay. Student startup, recent funding. There was something that he said, right? Once you get, one is getting the funding, but once you get the fund, you have to tell people how you get locked. You can't go for your MS in the US. You can, all that is all locked. It's how you committed yourself to something that you were married to it for quite a long time. So probably that's something that before the presentation comes up. Tell about your fundraise and what you had to sign into.
We bootstrapped a company, we and Vikas first, and we operated for an year, and after that we operated for an year. Me and Vikas bootstrapped a company, and then Vikas and his friend Sharath has applied for Chunati 1.0, and that is when we came to know about this competition, and they were selected for the first round and disqualified in the second round, and the next year is Chunati 2.0, and anyway we have Edumoon, so we tried for this competition Chunati 2.0, and then we have selected for the 3 rounds, and then this process of funding happened, and after that as well we have 2 rounds of interviews and discussions with the investors, and the company which is fund manager is Pontac, the UK based company, and Software Technology Parks of India conducted this event with over 3,000 plus startups. Out of that, only 72 startups made it to the final round, and we are one of the first student startups from Andhra Pradesh to get valued over 3 crores, and slowly we are expanding through our student clubs in each and every colleges through sports, entrepreneurship, culturals, and coding, and English entrepreneurship as well. And this is how the coming to the actual process of funding and all. It's a 5-month process. We need to talk to our CS, and as we are students, we don't know anything, and we used to ask Ravi sir and our CS and call each and every day and ask each and every doubt whatever we have, and they used to solve us, and they used to guide us how to do it, and Ravi sir provided us a CA, and we used to talk with them, and we used to talk to the fund managers and all, and there's a due diligence, and there'll be so much of paperwork that has to be done, and and we are a partnership. We are both partnership company, and then we converted into the private limited company after we got a news that we will receive the funding, and this is how the whole process went, and we are still learning out how to, and we are still figuring out things.
What did you sign for? Commitment.
Yeah, the commitment is we have asked for 20 lakhs for 5% share, and they agreed upon 20 lakhs for 6.6% share, that is 3 crore valuation, and the due diligence and all, it's that 6% to the Pontac, and other 10% is for ESOPs, that is employee stock options, and the remaining is 50-50 for Vikas and me. So first, coming to the story of Edumoon, in the time of COVID, we have started with an Instagram page. All the students went to the home, and students are facing very problems that they have left all the materials in the hostels, and Modi announced that there is a 7 days holidays, and everyone went to their home. And after a few days, suddenly college management has announced exams, and the students don't know what to read, and they're in a shock. So that is when we have come up with a solution of providing all the question papers and analysis, and what chapters to read, and what materials to read, and we have provided all the resources in a website, collecting them, and we have collaborated with all the toppers, and we have made video lectures to them, and then we have made a website with all these resources of materials, question papers, video lectures, textbooks, and all. And this is when students all got that we got a lot of traction from the students, and they used to share, and they used to talk among themselves about Edumoon. Like we have read from this, and this is very much helpful like that. And slowly after that, we have started upskilling. Coming to the semester exams, we have solved the problems of providing all the resources that is required for the students, and then we thought there is skills lacking in our students, so why not we start upskilling courses? And then we have come up with web development and app development workshops. And out of the first workshops itself from our own Andhra University College, we have got 300 plus student registrations, and that is when we thought of this is a good solution we are trying to solve. And then we have tried many things like MSET crash courses for the students. We have conducted 2 batches, and from those students, there are many students who have come to the Andhra University itself. And then we slowly started boot camps, and we slowly started collaborating with the companies. And we used to train the students and used to give the students to the companies. And these companies used to have great interns from us. And then we started college clubs, 6 different clubs like coding, English, entrepreneurship, sports, culturals, all this. And we used to we are going to collaborate with all the colleges, and we are signing MOUs with them. And this is how we are going to expand. And we have 12,000 plus student community on all the social media platforms. Like on YouTube, we have 4,000 plus subscribers, and on Instagram, and we have a community on Discord where all the students from these colleges are here to share their knowledge and to share any kind of doubts and all. We have the events happening in terms of coding club. We conduct 21-day coding challenges. In terms of English club, we conduct events. And then in culturals, we do flash mobs. And entrepreneurship, we invite guests. And on YouTube, we conduct free live sessions. And this is how we do it. So my co-founder Vikas is going to come, and he wants to also share.
So hi guys, so until the presentation tomorrow I'll be taking some time. So I'm just going to ask you one question. How many of you are students here or have studied? So everyone must have studied, right? So remaining all are not students? Okay. So everyone are students over here. So imagine today is first and you're having exams on 30th. So when are you going to study? Be honest. Go back to your childhood now.
29th.
29th? So no toppers are there just starting from first? So okay, we are also that same category. So if I have an exam tomorrow, I used to study today. So what is the first thing you used to do? You are having exam tomorrow. Now what are you going to do?
Important questions.
Exactly. Important questions. Next. What? Yeah, exactly. So first thing what I used to do is simple. I used to collect my previous question paper. Next, important topics. Next, first thing what I will do, what is tomorrow's exam name? Subject, without knowing subject name, no matter what you do is waste. So subject name, syllabus, previous year question paper, important topics. Then what is the other thing you do? That time Edumoon is not there. Okay. What I used to do is simple. I used to call my friend. Arey, how much did you study? Prepare sleeps. So unofficially that is. Yes. So yeah. I used to call my friend and I used to waste my time easily. Because how much he has studied, I used to think that. So 3 hours of my time is gone. So for that solution only we have started this. So what we did is we started Instagram page as Mahidha said. And we have prepared post only. How many of you are aware of Instagram here? Everyone, right? So in the 10 slide proposal we have started the subject name. swipe syllabus, swipe previous year question paper, and everything. And after that, everything started at Edumoon like that. We have started a journey. So after this, every student got engaged first. Okay, Edumoon is doing this. So we haven't stopped there. So from that day onwards, we have started these courses. And what are the courses students actually require? I mean, see, in classes, everyone is going to teach you, professors and everyone. But are you going to listen all the lectures? Right? No, right? Only what your friend says, what are the important topics, you only prepare for that. So we have just prepared the lectures for important topics only. So that first, at least I have to pass my exam. I don't need to score 100 out of 100. First, my goal is 50. That is passing mark. After that, I will study the other remaining. So we have curated all the university resources basically. After curating university resources only, we have started engaging to the students. Now what? Simple. Students come. Obviously, student mentality is whenever there's an exam, then only they come to us. But what about remaining exams? Our exams are not there. Will you come to us? Yes or no? No. Obviously no. Because only exams time only Edumoon is going to remember. That's why we have started college community and student community. So we have started clubs. Because we are framing clubs in every college. Like 6 clubs as it has said. Coding club, entrepreneurship club. These clubs are diversified to everybody basically. So until this diversification, now every day a club happens. Like we have 6 clubs. How many days we have in a week? 7 days, exactly. So 6 clubs. Each day, 1 club. Example. I haven't seen this.
So our company's purpose is to build one of the largest student communities in India. And the next. So the main problems we have found is there are no proper skills and there is no proper peer-to-peer community and there is no lack of proper guidance of what to choose in their career. And the solution we have found is we have found we have created an all-in-one platform where students can get the resources in just one click. And then we started for the skills that they're lacking. We have started cohort-based courses, and then for the peer-to-peer learning community, and we have started to student community in all the colleges. And coming to the market size, we have a large market size of 2.28 billion for the tech industry, and there are 9.5 million paid users, and there are many college students who are freshers and graduating every year from the engineering colleges. And the main crux of the value is we are providing solutions to all the engineering departments of computer science, ECE, EEE, CSE, civil, whatever the department are from. We are providing them all the resources that they require, and we are expanding through student college clubs in each and every university. And the student community we have is our main value. And coming to the business model, we are providing upskilling courses and crash courses and boot camps from pricing from 300 to 3,000. And we use referral strategy for this. We so we collaborate with all the college ambassadors, and we started referral programs, and that is where all the revenue comes from us. And we are on different channels like YouTube, Instagram, Discord, WhatsApp, LinkedIn, Twitter, with all the student community, and we collaborate with the companies, and we train the students and give the students to the as interns to the companies. And coming to the competitors, there are competitors like BlueLearn, Akira, and Virgio, who are doing the same stuff as us, but we are concentrating both engineering as well as community. That's what makes different from them. So as I said before, we are conducting several. We have paid users of more than 1,000 students, and these are all the coaches from PhD, and as well as these are working in software companies like with 14 lakh package and all. We have started internships and boot camps, training all the students in all the skills that are needed for them to get a job, and as well as we have tried different boot camps and crash courses and workshops that to know the students, and we are doubling down on what works and all. So this is a website with all the courses, tuitions, blogs, and we used to conduct events on YouTube. We conduct weekly events, uh, uh, inviting guests to our YouTube channel on career guidance of what to read and what to choose in their career, with guests from NIT, ISRO scientists, and who cracked GRE, CAT, All India rankers, and all. And we in on Instagram we have about more than 4,000 plus student community, and this is where we mostly engage with the students and know their problems. And on YouTube we provide we have 30 plus courses and 2,000 plus subscribers, and we conduct many events from our student clubs as well as the Edumoon skill based courses. And coming to the positioning, there are many other competitors and companies which are focusing on K-12 and higher education, upskilling, and tech problem. And we are concentrating on engineering plus student community. And this is how we are positioning from other startups that are there outside. So we have started from providing the resources and then video lectures to conducting courses, cohort-based courses and webinars, and now to college clubs, expanding through collaborations with the companies. The fund we want to utilize mostly on hiring good talent and expanding a student community, and the infrastructure, the tools, and the technology that we are focusing on. Mainly, these are the five main things we want to collaborate with all the students from the colleges and expand our community. So, me and my co-founder Vikas, and this is our fund manager Pontac, a UK-based company. We have received a fund of 20 lakhs in the competition of software technology parks of India, Chunauti 2.0. And because of this team that we have a strong team in design, technology, and operations, design and technology. These are all the and marketing and all. Because of this team, we are here and we were able to operate everything. And these are the paper articles after we got received funding, and we got valued over 3 crores. And these are paper articles from Times of India, Hindu, Inadu, Sakshi, and all. And we have collaborated with all the colleges of 6 different clubs, starting from Andhra University with the support of Ravi Garu and Vice Chancellor Prasad Reddy Garu. And then we have started expanding our wings through 6 different college clubs in each and every colleges of degree and engineering in and around Vizag and all the colleges. These are companies that we have given interns to, like Schemax, Anti-IoT, and Boltzmann Labs, Opsil, so that students will get the real life skills. And we are looking to collaborate with all the companies and colleges, and we want to impact the students' life. Thank you.
Any questions for them? Or any suggestions, ideas?
As we open for suggestions.
I think 2 people that you have to collaborate, just my listing. One is to expand your bouquet of services. One is interview buddy, or Kiran, or Srinath, or me. So, and then pick up guys. So, Ragul and yeah, they're all here. So you can see how you can. So that's where you want to go.
Are you currently generating revenue?
Yes, sir.
Revenue.
We have generated revenue over 5 lakhs with all the live premium courses
5 lakhs over a period of
over a period of 1 year.
1 year.
Yes, sir.
Right now we are generating revenue through courses. I mean, for every month we conduct a course basically. So last month was C program. For that we generated around 50,000 for that. I mean, we are expanding through the clubs format. So this clubs, everything is done for free. We are not charging that for students. We are generating revenue only through tuitions and courses. So parallelly, revenue is going on and student community is building on.
But as of now, I think you have
Yes, yes.
All interns.
All our interns
All
basically.
interns, do innovation.
That's you. Yes, we are still working.
money out of it.
Yeah, with the help of the funding we are taking right now.
That's from government, not from their own money.
Yeah. So yeah, we have to still improve on our revenue streams. We agree on that. But mostly we are working on workshops, courses, and boot camps. Those are the things we are charging. Other remaining services are for free. So more number of community, more.
I think you have to tell what future your revenue stream by having the student community and
Yeah, exactly. So example, let's take a count of 100 members are there. Student community of 100 members. So we are offering services to all of those 100 students. Now, if we charge anything, will students will accept? No, right? So out of 100 members, at least 10% will think, okay, something they have kept, and at the end, only 5 people will be joining. So out of 100, it's only 5 people will be joining for the paid course. So let's imagine a community having 1 lakh members.
Just want to have a point. You see what you're saying, you're only month, right?
No, it's per course.
It depends on the course. Like we have generated of 1 lakh.
Before, yes, before the funding this was, we have this program. So last month course was, C, we have a C programming course. For that we have generated 50,000. So that is one of the course.
Generally, it's outside all this coaching and everything. For each course, they're charging close to 50,000, right?
Yes, that we are charging only 300 to 3,000 per student. They're not exceeding more than that.
You're not generating enough value to generate higher.
Yeah, premium courses we need to collaborate with respective professors. So that
See, we
will
already have a membership of about 12,000 people, right?
yes.
So, higher.
The community has added only in the last 3 months only. So only after we received funding, we are expanding to the form of clubs. So if we keep paid courses at the same time, no one is going to join. That's why when we received the funding at April month, so May, June, July, what we have done is we just did only the free service. So for testing out, we have just in this month only. In August 5th, we have started this course. That's yesterday only.
One suggestion. So the way your initial positioning looks like, and it's going to be honest about recruitment. So the way your positioning looks like is, you can join a 4-year engineering course, but all you do is you earn through your exam and spend the last day reading for the next day's exam. That's how the initial positioning came up. So I think your overall objective seems to be that you create value for students over a period of time by encouraging them to build their value. Like especially when you're teaching them some course or providing them some solutions. So you're basically asking them to work on their business and also do a course that will probably get them a job of some kind. I think that's how I understood it. But your initial positioning is very much focused on South India. So if your website looks good, everything is good. But when you presented it, it looks like you're solving one part of the world's problem. And if you look at a global education system, and if someone is studying in US instead of in India, there's no last day preparation credit. And usually you work with some kind of credit system. Your professor gives you some assignments. It's not just exams that you deal with. You actually reciprocate with some kind of value building system for the students. So I haven't seen your roadmap, but if your roadmap is going beyond what our state Andhra Pradesh are there, so eventually you get to a stage where you attract people. And I think the positioning need not be about last minute studies and how you help them with important questions. Because the whole reason of academics is for somebody to enjoy through the curriculum, get the value. Exams are just milestones or checkpoints. And if we encourage the culture of just last minute reading, that's the good thing to do.
That was the initial idea when we started, as you said.
That's how your questioning came up.
Yes.
But then when I saw your courses and the other things, so your overall questioning need not be just about that last minute study. And I think you can avoid saying that as well. Maybe to a student, you probably would attack them by saying, your problem is about how do I rate it now. But when you're positioning to an investor, it need not be about encouraging students to come and take your platform for helping them build on their plans for next time. I hope you're getting it.
Yes.
So that's how it would resonate with any investor as to how you create value. And anyway, this is just my
That was initial stage, but we are now have the upskilling courses from all the industry experts, and then we the student communities. It's all different from what we have started and what we are now.
So all I'm trying to see is 10 or 15 minute journey that you gave us. That's how you came on. That's how you came on that we are positioning this initially as this. Probably stuck to your mind that that's how you initially started. But now when you graduated into something,
I think one-to-one.
Yes, it's better to talk.
So that you can deliberate along.
Sure. Thank you, guys.
Okay, quickly.
see basically what I understand is your main focus should be on the community. The moment you ask me, they said it's very strict. And I also say that I think you should try to get in touch with some collaborators like we talk about NBS, non-banking financial companies. I don't know, they heard of companies like Avanti. There's one more company when you're HDFC Credit. They all give non, they don't take any collateral, but they give more push. They give real student loans. You can collaborate them. They develop the loans are very well at 49%. You can earn at least 1% or 1% as a commission. So those kind of things will give you more mileage. At the same time, also give value to the student community. Because all this ESG, that's why also you can easily get everything from state or we know that, right? Because student community is meant for that. So whenever the moment you ask them to pay, they say, right? I think you should focus on that than the other part. What the revenue earning is, as of now, I think it's peanuts. Don't take me wrong, that's the fact. One final question.
Thank you, guys.
But what happens is when I do this, implement the business. It does show, but when I am connected to this, implement the business like this.
Can I get a thundering good evening, please? Let's get the energy up in the room. Good evening, everyone. Good evening. Okay, so thank you so much for the opportunity. Today, what I'm going to do is I'm going to speak about my favorite book, Start with Why by Simon Sinek. How many of you all know Simon Sinek? Raise your hand. How many of you all read Simon Sinek's books? Raise your hand. Alright, so today it's about the session on, it's a totally a business perspective when it comes to his book. And again, I'm going to present the book as it is. I'm not going to tell anything new from my perspective, okay? And it's everything is from the book. Are you all okay with that? Yes?
Yes.
Okay, so 2009, Simon Sinek released his first TEDx speech, which became a world lead at the end of the day. And from that, he basically gave an idea how leaders inspire others to make action. And if you go to YouTube, of course, you can find a lot of interesting insight about this particular TEDx speech. This is the one. It says, start with why, how great leaders inspire, how great leaders inspire action by Simon Sinek. So these are some of his books. The first two books are my favorite too. The first one you can see start with why, and then find your why. First what he did was he released start with why, and then again he said, and he released again a market demand saying how you have to find your why. Please read Find Your Why. And Leaders Eat Last, another book. So these are some of his favorite books, and first two are my favorite. So let me begin the session with two important questions. How many of you are using Apple in this room? Raise your hands. Apple. Right. So, in the world, there are some people and some organizations. Okay, it's very difficult for them to answer. Now, if Apple introduces a blender, we go and buy for sure. Correct? If Apple introduces a blender, we go and buy. But if Dell introduces a blender, we go and ask Dell. It's a computer company, why Dell is introducing a blender? Correct? How many of you agree with me on that? Definitely, we'll ask a question from Dell. You are a computer company, why you are introducing a blender? Now, the second question is, why do some command great loyalty from the customers and employees alike? Now, you see some leaders with great followers. Leaders with great followers. And you also have some great companies, great brands like Apple, they have loyal customers. Now, when Apple introduces, say, the new introduction of, say, iPhone 14, just say, when it's coming out, do you think we go and negotiate with Apple? 250,000, and I get it for 200,000? Do you go and ask? No, we never negotiate, right, with Apple. And at the same time, there are some great companies, those who are loyal employees. Agreed? They have loyal employees. So the question is, right, now here, for the leaders to have followers, also for the brands to have customers, also for the companies to have employees, what we are talking here, human decision. Whether to follow a leader, or whether to buy the brand, or whether to stay in the company. So that's a human behavior. So Simon Sinek says in the book, how you can influence. There are only two ways to influence human behavior. One is manipulation, next is inspiration. Manipulation and inspiration. So let's see what are these manipulative techniques are. Price is a great manipulator. Correct? Say 200 rupees, give it to 150 rupees, I will come and buy. For promotion, buy one get one free. How many of you all signed up for this buy one get one free offer? Raise your hands. Everyone, even including myself as well. Promotion is again a great manipulator. And fear factor. The politician might say, if the opposition comes to power, they will increase the tax. What we do? We get scared. We vote for the politician who says that, and we also get screwed. It's a different story. And aspiration, celebrity endorsement. When we see one of our favorite actor who is drinking something, and we go and buy the drink. Correct? But now the question is manipulation is very common in the world? Is it very common? It's very common, and that's the no. But what Simon Sinek says in his book, Start With Why, manipulation leads to transaction, not loyalty. It leads to only transaction, not loyalty. So what he proposed in the book, an alternative way. Alternative perspective, what he says is, leaders who have had the greatest influence in the world, they act, think and communicate the same way. That was total opposite to what everyone does. So, interesting quote here. He says, people won't truly buy into a product, service, movement or idea until they understand the why behind it. So what he did was, in the book, he actually introduced an interesting framework called Golden Circle. what he says, everything he says, always start with why. Now, how many of you, sometimes what we do is we wake up in the early morning and we used to compare ourselves with the neighbor, correct? Sometimes we compare and say, he's doing great, he's earning millions of money, and we look at our friend and say, no, he's in a good job, he's earning a huge amount of money by doing those things. But the thing is, what he says is, when you have a strong why, when you have a purpose, you become great. Man, you become your own competitor. You become your own competitor. So the framework Simon Sinek introduced in the book is the golden circle. He says everything starts with why, then how. So why you do what you do, how you do what you do, and what you do. So your product and services, where it fits in. Your features of your product, where it fits in these three elements. Where it fits in. Whether it fits in your why, how, or what. Features of your product and services, it fits in the what, why, it's a purpose of yours. Why you are doing what you are doing. So Sinek's powerful idea, he says, if you use the golden circle framework, you can build organization, you can lead movements, you can inspire people, and what he says is, it all starts with one. So as I mentioned, right, so the new competition based on this particular framework, you become your own competitor. Now you might be asking, Dr. Lalit, it looks very theoretical, but he also says is, it's not an opinion, it's a biology. He says in this book, he actually connected the science of connecting with your neocortex brain as well. So my suggestion is, you have to read this book if you want to find out more how it could be a biology. So this is the circle. So why do you what you do? What's your purpose? How do you do what you do? That is your processes, systems comes as how. What you do is the third one. So always why you do what you do. So one day, Steve Jobs, okay? Now investor went and asked Steve Jobs, who are your competitor? Who are your competitor? You know what Steve Jobs answered? He says, I don't have competitor and I don't know my competitor. So the answer from the investor, so what's the point I should invest in you? You don't know your own competitor. You know what Steve Jobs answered for that? He says, my employees believe what I believe, my investors believe what I believe, my customers believe what I believe. If you believe what I believe, come. If not, don't come. Right? So if you go and ask Apple, they never treat anyone as their competitor. They are their own competitors. You know why? When you have a great purpose built around your product, I will also give a little brief on edge of concern. You find your edge of, and then connect that with a great purpose. You can build organization, and you can create this as a great movement. Now you might be asking, can that be possible? If you ask me, it can be done. Now, I'm one of the founders of Pickable, which is a global movement for readers. We are in 4 countries, Sri Lanka, India, Singapore, and UK. We are in India 15 region, and we have a huge reader base, and our ultimate objective is to inculcate the habit of reading. Now, entire model of our business is built on this and the edge of framework. Even if we recruit people, we always find the edge of, and then only we assign them to the task. So this is an interesting concept. And if you ask me, is this particular circle is only for entrepreneurs? Not only for the entrepreneurs, even if you are in your career, or if you are a student who are looking to be better at yourself. So everyone, this particular framework helps a lot. But understanding it, studying it depth helps you to be better at what you do. So the golden circle is useful. What he says, Simon Sinek says, there are a lot of practical application where you can inspire people. The second book he released is Find Your Why. If you read, it is actually an interesting, brainstorming session that you can do with your fellow colleagues. It's to understand your why. And then it's a guide to improve leadership when it comes to the golden circle. And it also helps you to build a great corporate culture. Hiring product development department. Not only that, it also even explains how you can create a loyal customer base as well. So, as I mentioned, when you have a great sense of why, you become your own competitor. And you try to become great today compared to yesterday, you become more great tomorrow compared to today. So, you become your own competitor when you basically great sense of why. So let me quickly brief you examples that he has mentioned in the book. Now, how many of you know Martin Luther King? Yeah. How many of you know Steve Jobs? Everyone knows, right? How many of you know Wright brothers? So what he mentioned in the book, they had little in common, but all started with one. Let me brief the real story. See, August 28, 1963, for Martin Luther King's famous speech. What's the speech? The famous speech. How he started his speech. I have a dream. 250,000 people gathered. He didn't have mail services like these days. He also didn't have postal services like these days. Still 250,000 people gathered. Around 250,000 people gathered. So the reason there is, you think all these 250,000 people came for Martin Luther King? They came for themselves. Martin Luther King's purpose is to eliminate the racism from USA. So whoever came, they came for themselves. They didn't come. Okay, that's what he started his speech. I have a dream. That particular dream of Martin Luther King was totally in match with the people who came. He didn't say, he said I have a dream, but he didn't say I have a plan. He didn't start saying I have a plan, he started saying I have a dream. So Simon Sinek says is, that's the main reason, because of his strong why, he gathered 250 million people. Now take Wright brothers, they invented the airplane, right? But at the same time, we also had one more personality called Samuel Langley that time. Wright brothers, they didn't have, great engineers work for them, and at the same time, they also didn't have funding. Who funded them? Their basic by the invention. Wright brothers, not Samuel Langley. The question is, why? Wright brothers succeeded, while Samuel Langley didn't succeed with all the funding and all the team that he had. The purpose, the reason is, Samuel Langley wanted to be famous. He wanted to earn money. So when he said, I'm going to introduce a plane, everyone gathered. Media gathered, people gathered, in miserable plane. But Wright brothers, they had a pure purpose, so pure why of. He wanted the human race to travel continent to continent using as the medium. So who succeeded? He succeeded. They succeeded. Samuel Langley didn't succeed. So having a great sense of why also helps your team to believe in yourself. You don't sometimes when you go and ask HR team members, what type of people do I am? Typical answer would be, we always hire passionate people. Of course, in the world all are passionate about something, but the question is whether they are passionate about what you are passionate about. So always recruit people who believe what you believe. So Samuel Langley, and then all of them, Martin Luther King, Steve Jobs, and even Wright brothers, all of them have one thing in common. They all started with one. So simply, there is an interesting quote which I like the most from the book. Customers don't buy what you do, they buy why you do. And even there is a interesting lesson for entrepreneurs. Even if you are communicating, don't say my product is great. Don't say I have a 24-hour customer service. Don't say the features. He says always communicate the why. Your message should go like before. Why, how, and why. And that's some great, interesting 2 chapters that definitely helps the organization plus also entrepreneurs to understand how you can design your message connecting to your why. Now, let me quickly tell one interesting example. When creative technology introduces the MP3 player, what they said? 5 GB MP3 player. You know what Apple said? You know what they said?
Millions.
1,000 songs in your pocket. Can you see the difference in communication? 5 GB is more towards your what? Where 1,000 songs in your pocket more towards your. So, this is one of our purpose-driven venture in the book, which started 2 years back. Now we are inspiring people to read in the world. We are in 15 regions in India. Globally, we are in 22 regions. And of course, it's a business model generating revenue. The why is to make participants sense of self to the wonders of literature. And this is the other purpose-driven venture. Life after retirement. To make sure that elders keeping the elderly occupied. Again, it's not a non-profit organization. It's again social venture, which is generating quite a lot of revenue. So when you read Simon Sinek started by, there are a lot of interesting insight for entrepreneurs. Even if you are a student, you can get a lot of insight. But I also propose you all to read this book, Good to Great. Good to Great. There is an interesting step called hedgehog. So as I mentioned, now when we design any models, we focus on this. Now hedgehog is what? You hedgehog as an individual is what the things you love the most, what you are good at it, and what pays you well is your hedgehog. Now just say you love something, you are good at it, but if there is no monetary value, whatever, you are happy, but you are just poor because there is no monetary value. At the same time, if you are good at something, it also has a monetary value. It has a business model onto it. But if you don't love what you do, you are rich but poor. Why? You don't love what you do. At the same time, you are good at it, and then at the same time, you love what you do. If there is no monetary model or there is no economic model connected to it, it's just a dream. So my suggestion is, please go to today if you get a chance. Buy Good to Great written by Jim Collins. Again, my favorite book. A lot of insights, interesting insight from the book I actually got in terms of designing the entire strategy for the organization. And again, when it comes to a job, it's actually a strategy. If you really understand this better, finding a job not only for the business, also when you recruit the team member. So sometimes, how many of you all get frustrated? Really, my team member is not working properly. Raise your hands. You get it right. So the thing is, sometimes the job that they are in, it might not be a job. Right? So when you even designing the interview question, when we design interview questions, we always make sure that we ask questions based on this particular model. And again, I'm telling it's my perspective and it's our internal organizational practice. It may work for you, it may not, but again, it definitely give you a lot of understanding of what you are. With that one, let me complete this particular brief. Please, how many of you are reading in this room? Raise your hands. How many of you are readers? You don't need the full book to change your life or the whole book to change your life. When one line in the book is enough to change your life. One of the very interesting quote I like from Good to Great, he says, "Great vision without great people is irrelevant." Actually changed a lot of people's perspective. How many of you agree with me? Great vision without great people is irrelevant. Yeah? I'm sure you will definitely everyone. Right? So read and spread the inspiration out. At the same time, for me, my mentors and coaches are the books I read. For example, books like Start With Why, Find Your Why, then Jim Collins' entire series, Great by Choice, Good to Great, and then if you say in terms of habits, atomic habits, and all these books, not only we read, we also get our employees to read, because you don't need training when you have books on your plate or on the table. Right? So please read, spread the positivity, and also please, as entrepreneurs, it's important for you to read these two books. One is Start With Why, second Find Your Why, and then third Good to Great. The sequence would be read, start with why, so you will have an understanding of the framework. Next, you sit with your friend, do that particular exercise to find your why. Sometimes the why or the purpose you think may not be a purpose as well. But again, it depends on your intuition and your gut feeling. Go with it, definitely you can succeed. With that one, let me end my presentation. Thank you so much for listening. Thank you, Rami. Thank you.
Last one. Yeah.
You work at a 10 posters 7
Hello everyone, myself Astro. I'm going to present you about my startup Astro. So we believe that space is not just for a group of people or for a very limited branches of science and technology. Like all the science and technological development happening around the globe to make human life to an advanced level or more comfortable level. In the same way, when we are launching some astronaut to space or any celestial body, all the science and technology is required to make them safe and comfortable in the space or like moon or whatever we call. Okay, so that's our vision for Astro. Space for everyone, space education for everyone. Everyone means for every domain. Like if you are from law background, yeah, you can also get into space industry. If you are from aerospace, you can get into space industry. If you're from mechanical engineering, you're from computer science, you're from ECE, you for electronics, whatever, you can get into the space industry. So our vision is that we are offering courses. Like what is our approach? So what we are doing that we are saying space education for everyone. So our goal is to promote space sciences among the Indian student by offering them various courses of different domains. So let us see what is the problem and what kind of opportunities are having for a startup like us. So lack of accessible space education to the Indian students is the problem. And we all know that India needs a more transparent approach to the space situational awarenesses. And if you ask about who will read about, I mean, who will study these kind of courses and what is the necessity of doing these courses, like after doing this course, what is the opportunity? If you talk about opportunity, I'll not tell you that if you do this course tomorrow morning, you'll get a job, you'll get a mail that you're placed in Astro or something. But it is something which is going to happen in the coming years, I can say at least a decade. So if you see, Indian space industry is growing at a CAGR of 48% as per IBF, Ministry of Commerce and Industries. And Antrix Corporation expects that industry grow up to $550 billion by 2024. And these are the opportunities. If I have to read, the investment fuel the future of space industry by Bank of America to $1.4 trillion by 2030 or so. So how this is relevant for the courses that we are offering? So we are not just offering the courses. You'll get a better idea if you see what exactly we are offering and what are the solutions that we are providing. So for the problem, lack of accessible space education, our solution is that Astro. So what is Astro and who are we? Astro is a space education platform where we offer space sciences courses to the students. If it's a school student and it can be an engineering student, UG or PG or PhD. So it goes with paper course approach. And these are the courses that we are offering. If you see, everyone is very familiar with astronomy. When you talk about space sciences, most of us, like thinks that it is astronomy only, stars and rocket sciences. This is all. But we are offering courses like for physics student, we are offering courses on astronomy. And if you are from biology background, we are having a course for you on astrobiology, which deals with interplanetary things. For example, when you are talking about extraterrestrial life, most of us thinks that an alien with 4 eyes and 4 legs and 4, that is not actually, right? And there is a lot to learn about astrobiology. Like if you are if for example, let's say if you are going for a Mars mission, it will take it will take 8 months to go to reach Mars, and it's a journey which will take around 2 to 3 years. So whenever you're having this much long journey, you might require fresh fruits, like how you can do farming in space, or if you are talking about making a habitable city on Mars, you require a lot of these kind of stuff. So we offer courses on astrobiology which deals with this kind of stuff, and the targeted people for this is biology background. And Space Kiddo, so this course is for school students like who are very interested about these sciences, like the space sciences. So in this course, we just don't talk about astronomy or astrobiology. Like we cover all the topics, because if you provide a course to a UG guy or PG guy, he already or she already chosen their career, which domain they wanted to be in. But if you're coming to a school student, they still have a chance to choose their career. So in this Space Kiddo course, we teach them different aspects of space sciences and what are the technologies that are happening and this kind of stuff. And the fourth the fourth course is all about space food. It deals with what kind of food will be consumed by astronaut when they are in space, what kind of food they will consume, how they eat in space, and how did they cook in space. Or most of the people thinks that astronauts eat capsules when they are in space. This kind of stuff. And space law. So what is space law? This is something I like it because these days we are seeing, if you open LinkedIn or if you open Instagram or if you open some kind of news feed, you will see that some company is getting funded and so many companies are you are seeing a lot of companies are coming into the space industry. So space industry is not just like a small area; it's a very huge area. So let's say if some person is working on satellites, some person is working on propulsion technology, some people are working on some other solutions, but everything have guidelines. If you're working on weather satellite, if you're working on defense satellite, so there are some guidelines which are from the government. You need to obey all of those. So every company requires space lawyers. So to focus on that area, we are offering a course on space law. And drone pilot photography and drone technologies, this is a normal course where we teach the pilots like how to fly a drone and how you can assemble a drone, this kind of stuff. And introduction to rocketry is it's a basic level introductory course for the people who are interested in rocket science, like how it actually works, the principle, like how that actually works. That's it. So this is the approximate TAM. So how we have calculated is that we have calculated on like whatever the courses that we are offering. So based on that, we see the intake of how many students are joining in that specific course as per Ministry of Education. Based on that, we have calculated with a TAM of, we're expecting it within 100 people, if we can convert 5 people. So within 1 year, we can generate this much of amount. So this is an approximate TAM, I can say. So this is the website interface. If anybody is interested, they can simply visit our website and they can see what all the courses that we are offering. Based on their interest, they can click on it and they can enroll. They can see what is the curriculum inside the syllabus, like what are the session timings, what are the dates. If they're interested, they can make the payment to enroll the course. And if we talk about our revenue model, we have 2 verticals, I can say. So B2C and B2B. So what is B2B? In B2B, we actually like offer these courses to individual students, like it goes with individual person. Like if there is one student, if they want to enroll, that's our B2C, I can say. And per sale, we are the approximate sale in B2C is 1,500 rupees. And if we come to B2B, like in this, we offer these kind of courses to institutions or a large group of audience with at least 20-25 people at a discounted price where we can attract more number of people. And when it is coming to B2B, when we are dealing with institutions, we are expecting at least 50,000 rupees at least at this point of time, maybe in future, I'm not sure. So we do a lot of outreach events. Okay, so why we do this? Because we need to tell people what actually happening in this industry. So most people, like most of us, doesn't have proper understanding about these space sciences and all this stuff. So the industry expert needs to tell like what is the importance, what is the necessity of doing this space exploration. It's not just burning a rocket. It's much more than that. So like these are the one of the space talks which we invite people from International Space University and from Astro and NASA, I can say. So the first person is Professor Chris Welch. He gave a talk on Black Sky Thinking of New Space. Like he's the Dean for Master's Program in International Space University, Switzerland. Devat Mishra, he's a senior scientist which deals with liquid propulsion. And the third person, if you see, is Vicky Glorious. She is the former manager of NASA. She worked as a manager at NASA Food System Laboratory for 29 years. She worked with around 200 astronauts in real time. She also gives some kind of guest lectures to tell people what is actually happening in the food industry and this kind of stuff. And if you see the fourth last person, Sandra, so she is a deputy director at NASA Astrophysics Division. Like we invite these kind of people, industry experts, to talk with the students to inspire people to choose space as their career, not just a hobby. So we had some early traction, I can say, with these outreach activities and free programs. We had around 11,000 or 11,500 students who have already enrolled. I can't say enrolled, but participated in our events like space talks or space seminars or like free programs. And we have more than 1,000 people who actually paid and enrolled the courses. And these are the few testimonials I can say. If you talk about testimonials, I'll say that you just go to Google, you get more. And this is one of the letter satisfaction letter from Sri Shakti Institute of Engineering College from Coimbatore. We have done a course for their students of food technology in their department, so they gave this letter. And currently, we are launching a course with few universities and further university students. We are designing, so we have to sign the MOU. So I couldn't mention that university. So, thank you everyone. Thank you for your time. Open for questions.
Are you the founder?
Yes.
I want to know your journey at this Angus. You started the company, right?
Yeah,
What
if you
drove
ask me why I started, like I am very much interested in space sciences. Okay, so when I say that I am interested in astronomy, or when I say I am interested in space sciences, if I say space sciences, most of the people says that it's a very niche area, you can't get a job. You will be unemployed if you choose this kind of career. Now there is career. I wanted to show that. And if you talk about astronomy, like most of the people thinks that astrology, even though that is astronomy, it is different from, like, generally when you talk about astronomy, this is astrology. Oh no, sorry, astronomy. So what, I don't know how much revenue I'll do. Okay, so in this journey, I can say that I have impacted, like we have helped the students who wants to take space as a career. Like we have helped around 10,000 students, I can say. So it's a good thing, it's a good journey, and there is a lot to go, I can say. That's why we have started.
How are you positioning your startup with other space education startups like Space Nova and all?
Space Nova.
Space Nova, SSCRT,
Okay.
Jet
So
Space.
SDNX.
Not SDNX, SSCRT, SDNX.
Okay. So if you talk about SSCRT is offering courses mostly focusing on engineering kind of space robotics, space propulsion.
They are also, they're already doing the kit session and also
Space program.
the astronomy sessions and
Yeah.
all. Everything you have mentioned, they are doing that.
Yeah.
And also SDNX is doing as well.
Okay.
And even Space Nova is mainly focusing on
Astrobiology,
astrobiology and
yeah.
space robotics as well.
Yeah.
So how are you positioning?
Okay. So if you ask about how we are positioning with our competitors, is different. Okay. So let me tell you this. So if you come to SSCRT, like most of the courses that we are offering, astronomy, that's what this is, a like evergreen course. Like if we are a space science provider, we must offer astronomy courses, because most of the people are interested in it. And if you talk about astrology, astrobiology, how we are differentiating with IARF, Indian Astrobiology, this is Foundation of Space Economy. So those people are, I can say, they are having a different approach, like in terms of curriculum, in terms of how they are gathering people and how they are focusing. Like I can say that they are more focused on astrobiology and microgravity research. Like they have associated with the Skyroot Aerospace Hyderabad to do this microgravity research. So astrobiology is not. That's what I'm saying. Astrobiology is not just about one specific topic. Okay. So it is having a lot of topics in there. Okay. So what? Yeah.
Knew all of them, but there are many companies.
He's got a space startup, so that's why.
Okay, you got a space startup. All right. Okay, so that's how. And most of the courses, if you talk about space food, space lab, I don't know who are offering that courses. So our major focus is space food. Okay, so our major focus is space food and space lab. These are the major focus for us. And how we are differentiating is that I'll say that if I say something, we are providing better curriculum, then I don't want to comment that kind of statements, because whatever the approach that they are offering, that I'll not be able to tell you. But I can say there are people who have done the courses in space now are coming to us, and whatever the courses that we are doing, they are also going there. I'll not be able to tell you that we have it. So if you talk about, I'll tell you 3 points. The first point is that whatever the curriculum that we are developing, our curriculum is based on career based. Okay. So if you ask me what opportunity you have, I'll not be able to say that. Okay. But if you have an opportunity, how this course can help you, I'll show you the curriculum, how it can place you in the industry. Yeah.
Maybe one more
Yes.
question. So any academic institution, since yours is more or less offering a big program,
Okay.
so people always look for kind of certification.
Yeah.
So how do you think that you are able to provide such kind of certifications where it can be used to get a proper job?
Okay. So whatever the courses that we are offering is completely unaccredited as of now. If you ask me why, whatever the courses that we are offering with a very, very small tenure, which is mostly on virtual basis, so we'll not be able to get any certification from UGC or AICTE at this point, at this level. But what we are doing is that we are creating a base and we are getting strong in our revenues and we are getting strong in our curriculum and in our reach. So like we are in discussion with few universities, like where we can collaborate with them and offer a course in collaboration with that university, a kind of diploma program, so that we can like whatever the certification that we are giving, it is a kind of really meaningful for them as it is having been. At this point of time, we don't have any because without not having 1,000 learners, paid learners actually speaking. So without having that, if I come to Andhra University, if I ask I wanted to collaborate with you, can you give me the certification? It's a hard task for me because you'll say no. So before approaching the universities, we are creating a base. We are trying to make some kind of impact in the society, whatever we are doing. So later on, we wanted to approach universities and to do so. We have that thing in our mind. Actually, we are looking for it. So if we have any opportunity with AU, it would be humble. Yeah. Yes. Sir.
Can you please go to your TAM screen?
What?
Damn, total.
Yes. Okay. Yeah. Yeah.
Okay, just an observation.
Okay.
The number here should be 299799245.
Okay.
You can ask me why? Why not?
I'm expecting you'll say.
Can you tell me what that number signifies?
You'll say light year.
Speed of light.
Yeah.
Good chance for you to make a joke, which only few people will be able to understand.
Yeah, that's a good point. If I given another opportunity to edit that, I'll try to do so.
Do it.
No, not at this
Tell you
moment.
that, why the number is there, right?
Yeah, no.
And these are all arbitrary numbers.
Yeah.
Yes.
Somebody did some calculation based on which.
Yeah, but I'll not be able to tell you. I can tell you why lost digits 182. If you give me some time, like some 30 minutes or 35 minutes, I'll be able to show you whatever the calculation that I have done and whatever the successes that I
Yeah,
had.
but there are a lot of examples.
Yeah. That's why I said approximate time. Is there anything?
Okay, thanks.
Okay. Thank you, sir. Thank you. Yeah.
This from Geetam, just finished, right? Thanks, Sujan. Okay, thanks for your patience. Few things that are happening from now to the 20th. This is the next time we meet. I know we are doing better branding. Last time it was like full and people waiting, and now suddenly there's a drop. Yeah, it happens. There was a that. So 20th is the next time we meet. Then 2 or 3 events. Important one, I think 11th. We're having one, you can say, we're calling it along with AP Innovation Society, APIS, they have a 1 lakh fund. So they said, what can we do with it? We're doing a pitch and win. MVP and revenue making MVP growth stage startups can pitch. And if one among the top full, we walk off that day, end of that day with 25,000 pounds. So maybe 25 minutes to 25,000, 25 minutes for your 25,000. So we said we distribute it among 4 and give it to 4 rather than first, second, third, fourth. We said 4 good startups. So I'll send it out, and if anybody is interested, please let me know. Probably and submit by 10. And 11th we'll run this pitching session, and then end of the day, hopefully, yeah. But this time they are trying to send the money to this thing. Probably in a week's time we should get that money. That should be held here in AU. Both together are doing that. Then 10th we have a big event. Which is the Institution Innovation Council. Anybody, yeah, I know Campu is involved, but others who are interested, anybody whose target market is education institutions should be a part of it. It's a southern regional meet of all in and around education institutions will be part of it. A 1-day event. AICT chairman is the chief guest. It's about Institution Innovation Council, where all these institutions, there would be about 120 institutions, about 350 odd people from these institutions, called innovation ambassadors or incubation managers, dean, R&Ds, principals and others who are going to attend. And they're going to have their own posters, 1 floor full of about 60-70 institutions putting what they actually do in their institution related to innovation. And another 2 floors in the incubation center, which is again on the North Campus Engineering College by Dr. Vcs Do auditorium is the event. Whereas I know that's for the academicians. But 2 floors, about 70 startup stalls. Anybody who want to put up the stall, it's free. Just let me know. We'll give you a stall for free. And but if you want to put some hampers in the bag and want to give away something, maybe you have to pay a little bit too. So we're giving some hamper bags along with some few 2-3 companies which are putting in flyers in that, and the bag which we give to every individual coming from every college. So anybody interested can reach out to us, and these are 2 big things. I think then next month we want to just quickly hear about what. Still not finalized, right? Okay, we'll come up with that. That's Spark to US, right? So it's a big one. That's again statewide. I think statewide startup competition, top 20 going to Delhi, and for 5 states, probably 100 will come there, and I think top 10 or 20 will be from there.
No, they said indicative number, but not fixed number.
Yeah, from there, if you picked up among those probably 10 or so, take you to the US to the West Coast, and I think there's a cohort and the investor pitching in the West Coast, all expenses right, even from here to Delhi. Travel expenses from here to Delhi, from there it's all expenses paid. So if you are part of those 2 things, so 2 big, that's probably will happen in September to finalizing that. These are the things. Thank you, thanks. Have a good evening and a good weekend. Next one is a long one, but this one is yes. Thank you.